Hello and welcome back to Dukascopy TV. Investors are increasingly opting for economically sensitive European stocks as reduced stimulus from central banks is really putting the focus on the global growth outlook. Here to discuss this full is Matti from Societe Generale. Hello Patrick, thank you very much for coming in.
Thanks, good afternoon Monica.
Now if we're looking at the equities side of things, until maybe 6 weeks ago it was the defensive stocks which were really leading the way, and analysts had been expecting this great rotation for quite some time now, but there hasn't been a huge amount of evidence of that, has there?
That's right. However, before answering to that question, I believe it's important to get to know what you mean by defensive stocks. For me, defensive stocks is companies that are benefiting from resilient growth, give a good shareholder returns and sustainable shareholder returns. So basically, I call defensive companies like consumer staples or healthcare. However, on the other hand, defensive to me is not telecom or utilities, because although they are paying high dividend, they face very tough times in their business and they are cutting these dividends. So if you would have been invested in these sector, your performance would be quite negative. However, you're right saying that these defensive companies like consumer staples or healthcare did great over the past year until about the end of last quarter. If you see the performance, the one-year performance of these sectors, they are among the best performer ones. And on the other end of the spectrum, you have more cyclical, more aggressive sectors. Things have changed over the past, since the beginning of the quarter though, and there you see stocks or sectors like financials, particularly insurance, performing quite well with an increased appetite for risk.
Now, as you say, the times they are changing as we've entered into quarter two, and it seems to be even more so with last week. The signal from the US Federal Reserve signifies a bit of a more robust outlook for the US. With all this in mind, some analysts are now saying that cyclical stocks are well positioned to benefit from this. Is that something that you would agree with?
Yes, it is indeed. At Societe Generale, we are quite overweight on cyclical sectors in the US, particularly the industrials, materials, or information technology, because we believe the growth outlook in the US is pretty supportive for these companies. First and second, we also believe that you're going to see an increase in capital expenditure in the country that shall benefit industrials or IT companies. The picture for Europe is still at a very low level overall. However, we do things stabilizing, so there are some signs of hope going forward, and the big question marks remain on emerging market, where we see rising cracks in the shell, if I can say so.
Cracks in the shell, it does seem indeed. But in terms of, obviously some areas, some sectors have been performing better than others, but are there any particular stocks that you at Societe Generale are keeping your eye out for?
Yes, they are. There are always stocks on our radar. For instance, over the past, 2 days ago, we became positive on Oracle after the subdued or below par result they provided to the market. Other companies that we like, for instance, today is Deutsche Bank and Danaher. For going forward, we can see that there are companies that are interesting, especially with the market correction we have these days. However, we're still waiting for some more attractive entry level. I'm thinking about companies like Adobe. Adobe stock price has been performing very well since 1 year ago. Another company that we are interested in is Dassault Systèmes, the French software developer. But again, valuation is not attractive nowadays. We are waiting for better entry levels. A company that is becoming interesting at the current level is Bureau Veritas, the French testing company. However, looking at the stock price, the momentum is not there yet, and we are waiting a bit of a stabilization in the stock price before becoming more constructive on this name, starting to build position on them.
Well, it does sound as though you've shared a lot of tips there with ourselves, with our viewers. I'm sure they'll be very grateful for that, but also very grateful for you coming in and sharing your perspectives with us, Patrick. Thank you for that.
You're welcome.
Well, that's all from Patrick and myself. Don't forget, on Dukascopy TV, we take in all of the biggest stories of the week with the weekly wrap-up. So please do click back to the website for that. Goodbye for now.